Hello and welcome to the Business Standard Morning Show. I'm Swapnil Joglekar. Let's take a look at the stories for the day. Big tech is bracing for dismal profits and a looming recession. Not surprisingly, tech majors of the world like Google, Microsoft, Facebook, and Amazon have resorted to mass layoffs over the past few months. But US smartphone giant Apple has remained conspicuously out of the messy layoffs. How has Apple managed to do so? Debar Gasanyal finds out. With Google's parent company Alphabet announcing layoffs on Friday morning, Apple is now the only tech giant that hasn't resorted to mass layoff in recent months as a souring economy looms over Silicon Valley. The combination of rising interest rates and inflation has led to cooling customer demand and shrinking advertising budgets among the big techs. This has led Amazon, Microsoft, and now Google to tighten their belts and cut headcount in recent months. The tech giants were on a hiring spree during the early pandemic years but looking to rein in their spending now. Apple, however, seems to have adopted a different policy. The iPhone maker's slow-paced, measured growth strategy has put it in a better spot to weather a downturn or recession without going the mass layoff way. Between September 2021 and September 2022, the company hired only 10,000 new employees, growing its headcount from 154,000 to 164,000 full-time employees, according to its filings with the SEC. That's well below the tens of thousands that Amazon, Meta, and Google each hired over the same period.
Apple kind of between 2021 September to 2022 September, over a period of 13 months, added only 10,000 employees on a base which is 10 times or even more than that, lower than the base of, say, a Google or, for that matter, Microsoft and Amazon. On the other hand, if you just compare the numbers, the number of hirings done by, by one of these, say the e-commerce giant Amazon, was about 24% on a much larger base.
Apple's business model is also different from most other tech giants. Its primary business is in selling phones, tablets, and PCs, and not in advertising, making it less subject to the whims of the advertising industry. While Apple does own and operate several retail stores around the world, the company's physical footprint is relatively smaller than the massive network of warehouses and logistics hubs one associates with Amazon. It's also noteworthy here that the manufacturing of Apple products is outsourced to third parties. This means that the tech giant doesn't feel the impacts of changes in the smartphone demand cycle immediately. Apple has traditionally focused its investment on projects that are core to the business, as opposed to companies like Google, which has its famed moonshot factory, or Meta, which is currently dreaming in the metaverse. Amazon and Microsoft too have research teams focused on exploring and expanding the company's tech portfolio into newer tech avenues.
See, if we go back to the leadership style of Tim Cook, he comes from supply chain. So he was the chief supply chain officer prior to his movement as a CEO, post Steve Jobs. So coming from supply chain, fundamentally the risk appetite and the way to look at business is different. And that characterizes the leadership style of Tim Cook.
But will Apple's strategies work in the long run, or is this a temporary respite? What can be the challenges in sustaining this strategy for Apple?
Knowing the strategy that Tim Cook follows and his leadership style, this would not be temporary respite. However, they would still be cautious, and their investments, even on the specialized skills, would be also pretty much informed and would take a slow step rather than going gung-ho about it and bringing in big ticket investments. They are definitely going to go hand in hand along with the retail presence in India as well, in addition to their manufacturing or the back-end setup.
But what does Apple's strategies imply for its future in India? Subrat Sarangi, Associate Professor Strategic Marketing and Business Management, MICA, believes that Apple is in fact poised to create more jobs in India.
These could be manufacturing setups where, of course, skill development based on specific skills to produce and electronic chip manufacturing. So that is one is given on the manufacturing side. However, there are other skills as well which are required, which are slightly specialized. And that is where probably the key value addition would come from Apple's investment on skill development.
However, D.D. Mishra, Senior Director Analyst at Gartner, stresses that the need to evolve is essential.
Not changing is something, is not a great idea, I would say, at this point in time. Now, you have to balance the caution with the kind of risk which you undertake. And because buying behavior is shifting, consumer behavior is shifting, there are a lot of shifts which we are seeing in the market. And in this, having a kind of a rigid strategy may or may not work at times. So the organizations which are holding on to their rigid strategy of not changing things should actually be very careful about how they are actually going to be disrupted in coming times.
Experts also believe the iPhone maker has remained a cautious player and will continue to be so. However, if it wants to capitalize on India's emerging consumer base, it needs to evolve its strategies in search and AI. Riding on the tide of layoffs, tech majors have been downsizing their workforce in response to immediate losses as well as preparing for long-term recession. Meanwhile, India is also preparing to face the havoc of El Nino, which is synonymous with weak monsoon in India. Business Standard has recently reported that rain patterns in India are also expected to get altered with the return of El Nino in 2023. This in turn will severely affect rainfall in the country and, by extension, the Indian economy. What will be El Nino's impact? What can India do to mitigate the adversity? Tushar Verma brings the answers.
The world adopted a legally binding climate treaty in December 2015 to ensure the global rise in temperature remained below 2 degrees Celsius and preferably below 1.5 degrees, with pre-industrial era as the base year. The limit of 1.5 degrees rise in temperature is set to be breached this year. However, this breach will not be across the planet and will not be permanent. This breach will be triggered by an El Nino effect, a climate pattern during which the surface water of the Eastern Pacific Tropical Ocean gets warmer than usual. This is part of a larger phenomenon known as El Nino Southern Oscillation or ENSO. This affects the Indian monsoon, as the warming of the ocean surface temperature weakens the trade winds responsible for bringing monsoon in India. So, El Nino has always been associated with weekend rainfall. Severe droughts in India have always been in El Nino years.
70% of the total precipitation that the country gets in a year is during this 4-month monsoon season. It's very crucial for the Kharif crop, which is sown during that time. Also for the succeeding Rabi crop, the Rabi crop which follows, because it helps in filling up the reservoirs, the irrigation potential goes up, because Rabi is largely a period when the monsoons are not that much active. So it might happen that you might not get a very normal monsoon. The monsoon might be below normal, but the timeliness and the distribution and the spatiality, the spacing of the monsoon is very good. If that happens because of El Nino, it does not impact the agriculture production that much. But if El Nino causes this timeliness and the spread and the spatial distribution to go haywire, then it causes impact on the agriculture production. Means your crops will start withering. Then probably if it leads to very inordinate delay in onset of monsoon, then the time period for the crop to mature is very limited. It leads to low yield.
The dominant monsoon in India is the southwest monsoon, which affects 70% of all agriculture in the country. It usually stretches from the end of May to September. According to the Economic Survey of 2020-21, the share of the agricultural sector in total GDP was 20%. This sector, in turn, is largely dependent on regular monsoon. A strong El Nino may severely impact the agriculture sector and, by extension, the entire Indian economy.
Though our agriculture is now a very smaller portion of the overall GDP, but a very large population, almost 49% of your workforce is still dependent on agriculture. Though its contribution to GDP is very less than 17-18%, but the population which is dependent on farming is very vast. So that population and also the entire rural economy gets impacted if the monsoons are not up to the mark. And if they're not up to the mark in the rain-fed and the poorer states, it impacts the rural economy, it impacts the workforce, it leads to inflation, the food production can go down, and all this have an impact on inflation. And if inflation pushes up and economic growth does not come up, then it will have an impact on your overall economic of the country.
Climate models suggest that El Nino may appear around the second half of this year. Scientists have indicated that the frequency of adverse climate events has increased in the past few years. Events that would usually occur in 30 to 50 years now take place within 20 years. The same goes for El Nino. El Nino, by pattern, is irregular, occurring once every 3 to 7 years. However, its frequency has increased lately.
The El Ninos are nothing but the abnormal warming in the equatorial Pacific, which happens once in 5 to 7 years. So a warming in the equatorial Pacific can affect Indian monsoon through we call so-called water circulation and many other climate features. Historical data shows that El Nino, moderate to even severe El Nino can really pull down the agriculture, the monsoon rainfall. But as I told that all the El Ninos did not really lead to an Indian monsoon drought. And some for example, 97 drought, El Nino, it was very severe El Nino. We did not have a drought. We had a normal monsoon. But it happened, but the frequency is much smaller. So, but when El Nino develops, we should keep it in mind that there's a high probability that Indian monsoon can be on lower side of the normal. I will not call as a name as division or drought, but definitely it's on the lower side.
If this year's El Nino turns out to be severe, it is likely to have an extreme impact. Regions in North India such as Delhi, UP, Bihar and Jharkhand may experience drought, while regions of northern Maharashtra, Gujarat and Punjab may see floods. Overall, India will receive less rainfall. In such a scenario, is India prepared to mitigate this adversity?
These kind of abnormal events are more frequent. Abnormal events are likely to come in future with the global warming also is happening. So we need to be fully prepared in terms of adaptation to agriculture, adaptation to water resources, adaptation to power shortage could be there. If it's some places there's a lot of division, rainfall is happening. But I will tell you, the government is over the last many years have learned a lot of good lessons and they have fully prepared now. So, for example, 2002 drought, I remember, in spite of a very severe El Nino, Indian government has managed it. And that does not mean agriculture is not really affected. Agriculture is affected, but it did not peep into or drop into the people's problems. For example, there was no famine, there is no shortage of food, etc. And so Indian government is fully prepared. And nowadays, this kind of events, government can cope up.
Climate change has strengthened El Nino and its frequency. A scientific paper published in Nature Communications argued that there will be an increase in sea surface temperature in the eastern equatorial Pacific region, triggered by global warming. This increase, the paper said, would be observed decades earlier than expected, which, in turn, would exacerbate El Nino. While climate models have predicted a strong El Nino in 2023, the accuracy of the prediction can be ascertained only by March or April. Experts say there is no need to panic, but the country must be prepared for a weak monsoon. Over the years, the share of the agricultural sector in GDP has decreased, but a large workforce is still engaged in the sector. So, even if a severe El Nino will not impact the Indian economy significantly, it will affect the people involved in the sector. The increase in the frequency of adverse climatic events such as El Nino is the result of a rapid climate change. If the global temperature soars above 1.5 degrees Celsius, the effect will be catastrophic.
Let's turn to the markets now. The transition to a shorter T+1 settlement cycle will enter its final and most crucial leg this week. About 200 odd stocks representing large caps will be settled on a next-day basis beginning January 27. Experts say the final leg will be the litmus test for the cycle, as these stocks have a bulk of FPI investments. But are the FPIs prepared for it? Which FPIs may be worse off with this transition? Nikita Vishisht brings you the answers.
Indian stock market has come a long way when it comes to ease of trading in equities. From a T+5 settlement cycle, which was the order of the day back in 2001, the large street will switch to T+1 settlement cycle this Friday. In simple terms, a settlement cycle refers to the time duration within which the transfer of funds and securities takes place between the parties involved. Since 2003, India has had a T+2 settlement cycle. Under this system, trades are settled by the second working day. These exclude weekends, bank holidays, and exchange holidays. Hence, if a trade is conducted on a Monday, it will be settled by Wednesday. However, in November 2021, SEBI issued a circular for the transition to T+1 cycle effective January 2022. Since March 2022, successive bottom 500 stocks have been moving to the T+1 cycle at the end of every month. This Friday, the final 200 odd stocks representing large caps and high volume scrips will be moved to the shorter settlement cycle. This final leg assumes importance as these stocks have a bulk of foreign portfolio investor investments. FPIs have been opposing the transition since the beginning, citing operational difficulties. Emails sent to Asian Securities Industry and Financial Markets Association and Traders Forum Asia, FPI lobby groups that had opposed the move didn't elicit any response for this report. While industry experts remain hopeful of a smooth transition, given the phased implementation over 2022, they feel some FPIs may see teething troubles.
The concerns are mainly going to be logistical, more so for FPIs who operate in time zones which are very different from the Indian time zones. So we would see the Singapore, Hong Kong, Mauritius FPIs transition more easily than the US and the European ones. And concerns are more to do with, for example, logistical reasons such as, different market working days and holidays in different regions.
Investors have already asked clearing corporations to push the deadline for equity trade confirmations to 9 a.m. on T+1 day. They have also requested a single trade confirmation deadline for both institutional and non-institutional clients. Moreover, Forex will have to be booked either late in the evening of trade day or early morning the next day. Back home, Raheja of Julius Baer, India feels trading volumes may see a blip in the near term.
I very much doubt if we will see too much of an impact, as most people would not want business to get hampered due to logistical reasons. More so at a time when India is being looked at favorably, although in the short term, we could see some impact on trading volumes, not significant, but I think in the long term, it is not really an issue.
That said, analysts feel a smooth transition will put Indian stock markets on the global map, as it will be the second country to adopt the transition after China. A successful transition will reduce the risk of pay-in, pay-out defaults, will lower margin requirements and give investors more liquidity. In fact, stocks can be moved to T+2 settlement cycle by giving a month's notice to the market, although it will only be possible after a minimum of 6 months of trading under T+1 system. On Tuesday, Colgate-Palmolive, Maruti Suzuki, TVS Motor Company are some of the prominent companies scheduled to announce their Q3 results.
Meanwhile, the centre has released guidelines for social media influencers in India. They will be legally responsible for giving complete information about the product or the service that they are promoting and the benefits they are receiving in return. Non-compliance may lead to prosecution. But what actually is an influencer? In a decoded section, we look at what they do and how companies use them to promote their brands.
The Department of Consumer Affairs last week made it mandatory for social media influencers to disclose all the material benefits received by them, including gifts, discounts, and awards. Failing to do so will attract strict legal action. The influencer may even be banned from endorsements for up to 3 years. According to the new guidelines, the Central Consumer Protection Authority can also impose a penalty of up to 10 lakh rupees on manufacturers and endorsers. The penalty may even go up to 50 lakh rupees for subsequent offences. An influencer is an individual who has substantial control over the behavior of others. They have a sizable following and their audience tends to be influenced by their choices, opinions, and decisions. When they have a large following on social media and their circle of influence lies on the platform they use, these are called social media influencers. In a marketing context, they work with companies and brands to promote products and services. Unlike direct advertising in influencer marketing, brands leverage the audience of the influencers to drive awareness about their products and ultimately improve sales. The influencers are paid to promote the brand, believing their recommendation will prompt the audience to buy the products. This process of endorsing or promoting particular products by these influencers is known as influencer marketing. Companies ranging from e-commerce to online gaming are now paying huge sums of money for influencer marketing. While launching the guidelines last week, the Consumer Affairs Secretary Rohit Kumar Singh said that the size of the influencer market in India is 1,275 crore rupees. It is expected to reach 2,800 crore rupees by 2025 with an annual growth rate of 19 to 20%. Globally, the market is expected to top $24 billion by 2025. There are several types of influencers, but they are grouped into 4 categories based on the number of followers: nano influencers, micro influencers, macro influencers, mega influencers. Nano influencers have less than 10,000 followers. Generally, these influencers are experts in niche areas. Even though their following is low, they have proactive and very active communication with their audience. Micro-influencers are slightly bigger and have a following of 10,000 to 1 lakh people. Macro-influencers have a following of 1 lakh to 1 million. They do not have a niche audience and are approached by brands from all fields. They also tend to have a more rapid impact on product sales. The largest of them are mega influencers with a following of over 1 million. In addition to online influence, they have a substantial offline presence. Brands use them for offline promotions and events as well. The categorization is not limited to the number of followers only. Influencers are also listed based on their niches like finfluencers, offering financial advice, gamers, travelers, musicians, food critics, and fashion bloggers. With the growth of social media, the impact of influencers will also rise. The center's rules are an acknowledgement of this fact.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
That's all for today. For more news, views and insights, log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.